in search of the Holy Grail?
Yeah, well, the thinking here is that I was wondering, is it possible to go through sort of the reams of data of history and to spot certain characteristics that markets exhibit when they make a sort of a defined top or a defined bottom, which I sort of defined as a price prominence 6 months either side. So, for example, the last top in the S&P was in May of 2015. It was the high point, higher than any point 6 months previously and higher than any point 6 months afterwards.
Wow.
So
you
it's
have to consider a whole year before you can decide whether.
Yeah, well, because otherwise you just end up with.
Because every little tick could be top.
Exactly. So we're looking for something really, really prominent here.
That's cool.
So, for example,
we'll know in 6 months' time.
Yeah. So going back to 1982, for example, I only defined 12 tops in the entirety of the S&P. So what we're looking at is really more medium-term strategic tops and bottoms. And I kind of just picked a few technical characteristics that sort of our conventional wisdom says or can define tops and bottoms. And these include what we call positive or negative divergence. So when the stock market makes a new high, but a momentum indicator like the RSI, the relative strength index, does not make a new high, that's indicative of waning momentum and a possible top. I'm sorry, Joe, you have a question?
No, you mentioned the RSI. I have a chart right here on the terminal that sort of looks at the current environment and the relative strength indicator. So what, if anything, based on, A, what are we looking at here? And B, what, if anything, based on historical patterns might we glean from it?
Okay, so obviously the top is just a line chart of the S&P 500.
Right, so I'll expand the bottom because that seems where all the action is.
Yeah, so that is the relative strength indicator. Now, if we were to assume that the market typically exhibits this, then we would expect that sort of that line with the red, fetching red area underneath it to be making a lower high as the S&P 500 makes a new high. Now, as you can see, that hasn't happened. Momentum was at its peak as the market was at its peak. Now, historically, this is in fact the case that you do typically see this divergence. So when the market historically makes a high, momentum is below its sort of 1 month peak. And I think we've got a table somewhere. I looked at this for both the U.S. markets and foreign markets. And we got that. Can we put the table up?
Do we have the table? We have got them prepared. I know we
have them tracking market tops by momentum.
Yes. Yeah. So it tends to work both at a top and at a bottom. So here you can see. Typically, the RSI of the S&P 500 is on the day it makes a top, is 3.4 points below its peak of the last 21 trading days.
I just want to be crystal clear here and summarize it. So when we saw that recent top, which you're not, by your definition, we can't actually call it top.
We can't call it until July.
But were it to have been a top, we would likely have seen already some flagging of momentum going into that, which we did not see going into that.
Historically. Now, I looked at a few other factors as well. Typically, volume is higher than average, which we just about managed. It was about 3% higher on the day we peaked than it was over the prior month. Now, there's also this conventional wisdom you often see price rejection. So at a top, you would see the market make a new high and then actually close lower, which is called an inverted hammer. Or at a bottom, you'd see it really try the downside and then sort of rebound, and that doesn't work. So typically, in the U.S. at least, when on a day that the market peaks, it actually rises, which is certainly what we did see this year on a strong day on January 26th.
So how did you do overall? Because you looked at volatility, the technicals, divergence between regions, volumes. Any great predictor?
Well, they all, other than the one I just mentioned, they generally work. There's none of them that has a perfect hit ratio. So probably the best hit ratio I found out of everything is on the day of a market bottom in the S&P 500. Volume is higher than the previous 1 month average, 92% of the time.
Ooh, that's a pretty good
nice.
one. Yeah,
that's pretty good. Now, the other interesting thing that I found is that China is unlike any other market, which was really, really interesting. So typically most markets, once they peak and start to sell off, you see volume increase. The Chinese just kind of walk away. And typically at a market bottom, you see volume reach a crescendo at the bottom and then slowly ebb a little bit as the market rally, whereas the Chinese just pile in.
It's a great story, a great article, so we would say to people that they should go out and read it. Kind of glad that there is no conclusive evidence to suggest, because otherwise we'd be out of a job.
We certainly would, and I love the fact that you took on the whole idea, the mantra of past performance does not predict future performance.
I mean, I think ultimately you have to look at it like a card counter, right? You're just trying to put the odds a little bit in your favor.